Hello everybody, this is Mike Prey with Keller Williams Realty. Happy Valentine's Day. It's about mid-February when I'm making this video, and I hope everyone's set to have a wonderful Valentine's celebration. Wanted to talk a little bit today about interest rates. We'll talk about what the specific interest rates are, but people are watching interest rates and they see them bounce up and down, and they'll change from one day to the next, and it's a little disconcerting and a little bit confusing. So I wanted to give some advice about how to look at interest rates overall to get a picture of what's happening and what you should do as far as acting in the marketplace. So for example, last week, interest rates were approaching 7. Last October, they were almost at 8. Today, Wells Fargo is quoting 6.375% on a 6.578 APR. So they bounce up and down, but if you made a graph of it from last October to today, you would see that the interest rates are generally trending down. Predictions are that the interest rates will continue to bounce because there are just a lot of factors that happen that we can't control or necessarily predict. Economic indicators, economic factors happen, jobs reports, what action does the Fed take trickles down to interest rates on homes and mortgages. And so a lot of different variables go into it, but the prognosticators are predicting that we'll see interest rates stay between 6 and 7, and a lot of that is being borne out. So the general trend is down. You may see differences from one day to the next, but the general trend is down. And people are starting to plan accordingly. They're doing their budgets based on an interest rate between 6 and 7% when they're thinking about selling their current home and buying another one, or getting into the market for the first time. And so we're starting to see a lot more activity with buyers and sellers out in the market, but particularly buyers. Some interesting statistics, and I'll try to mention what these indicate as we go along. But homes sold was down December to January about 28%. Now that reflects a little bit the sales in December, which is traditionally fairly low because people are doing holidays and other things and are not typically selling homes. It's down 32.6% from this time last year. So we're seeing that homes sold or closed trend continue to drop. New listings, though, were up 23.9% from December to January, and they were up 16.3% from January to January of last year. And so more people are now starting to put their homes out on the market. And what we're seeing is an increase in activity a little bit earlier than what we usually do for the buying season here. Usually you start seeing listings come on after spring break, but we're seeing them getting started here over the last few weeks. People are getting their homes out there on the market. The median sales price was up 2.7% from December to January at $380,000 in this area. That was down 8.64% from last year, when it was $415,940, but it looks like that median sales price is starting to climb back up a little bit. Not as rapid pace as it's done in the past, and prices are stabilizing to continuing to climb a little bit at more normal appreciation rates. However, if the inventory continues to be restricted and a lot of people start getting into the market, we're seeing a few multiple offer situations pop up in various places, and so we'll see upward pressure on those prices. So if you're a buyer and you've been hesitating to get into the market, or if you're waiting for 3% interest rates to come back, you might take a look at your budget and refigure and go ahead and get out there and get started before everybody else does. Available inventory was down 7.1% month over month, and that's indicating a continuing constriction in the inventory. Year over year, it was down 16.13%, and so the inventory continues to tighten as the demand continues to increase. Homes under contract is one that I haven't shared in the past, but it was interesting that between December and January, homes under contract, going under contract, was up 32.6%. So that just indicates that people are getting out there in the market earlier than they have in the past. Last year at this time, homes under contract was we're still a little bit lower than last year, down 16.4%. But that, I think, has a lot to do with the available inventory. Days on market was up about 11 days month over month at 52 days. It was down, though, 14 days from last year at this time, when it took 66 days to get a home on the market. So things are starting to speed up a little bit. Mortgage rates were up 0.08 month over 8, ended the month of January at 6.69. For the year, they were up 0.56 at 6.13. But as I mentioned today, Wells Fargo's quoting 6.375. That's probably with some points because the APR is 6.578, but still that's below, that's a decline from the end of January to the middle of February. So we'll continue to see that, as I mentioned before. Showings is a definite indicator of demand, and showings were up December to January by 53.5%, and interestingly, they were up year over year 11.4%. So that indicates that people are getting out there in the market in numbers that we haven't seen in the past. That number's starting to grow. And so once again, just to reiterate, it looks like the traditional selling season is coming a few weeks early. And so that means it's a good time to get out there as a buyer. It looks like we might have a rush. And it's also a good time to get your home on the market if you're a seller and begin to take advantage of this increase in activity. Well, that is the update through January of 2024. And it looks like the market is starting out and getting ready to increase. If you have any questions about what's happening in your neighborhood or the value of potential sales price of your home, please give me a call at 469-446-0234. Or you can email me at mikepray2@gmail.com if you're watching this on social media. Message me, and I'd be glad to answer any questions that you have and take a look at what's going on in your neighborhood and develop a strategy for your real estate activity this year. Thanks again, and look forward to talking to you next month. Bye-bye.